I'm Calvin Cooper from CRC Accountancy.
And I'm Lauren Cook, a solicitor with D&H. So welcome to the first episode in our very exciting mini-series on property letting. So our first episode, we're focusing on getting started with your property letting business.
That's right, a lot of folk find themselves in the position of becoming a landlord for various reasons. It might be that you still own a house that you previously lived in and you're now looking to let that out. It might be that you've inherited a property, or it could be that you're just looking to purchase another property purely for the purpose of letting it out.
And on that last point, one quite big important consideration to bear in mind is the relatively new land and buildings transaction tax. So it used to be called stamp duty land tax. It is a different regime. Some people can be caught out by that. They weren't aware that it's something that they have to consider. But the main aspect of it, which is relevant to buy-to-lets, is the additional dwelling supplement, or ADS. So ADS is an additional tax. So where at the end of a transaction you will own 2 or more residential properties, and that can be anywhere in the world, you are liable to pay an additional 3% of the purchase price. That's over and above any LBTT that you pay in the first place.
That's right, so it's actually quite a big additional cost, and it's a cash cost, meaning that it's money that you have to find over and above any deposit you've already got for that property. Furthermore, if you're buying a property through a company, even if that company has no other residential properties, it will always pay the 3% ADS. So to put that into context, on a house costing £150,000, previously you would have paid land and buildings transaction tax of £100 on that, which I think everyone that's in that position can manage that.
Yeah, it's manageable. Yeah.
Pretty reasonable. However, now, as a result of the ADS, you also have to pay an additional £4,500 on the purchase of the property. And like I say, banks will not lend against that. That is just cash you have to find before you can get going.
Which is much less manageable.
It's less manageable, yeah. It's just made the initial purchase a bit more expensive.
In addition to tax, you have to consider what kind of mortgage you need. So you will need a specific buy-to-let mortgage. If you don't have that, you will put yourself in breach of your mortgage conditions and could put yourself at risk of repossession, which I think we can all agree is best avoided. We don't really want to go there. Another thing you'll have to have in place is landlord's insurance, and possibly also third-party liability insurance in case somebody gets injured in your property.
So once you've got your property in place, there are generally 2 routes that people go down. You'll either go down the long-term letting route or the short-term holiday lets route. Long-term lets generally run on a lease that lasts between 6 to 12 months and provide you with steady income over the year. A shorter-term holiday let, however, can last for as little as 1 night at a time and requires a much more hands-on approach. You're there between occupants, cleaning the house and getting it ready for the next people that are coming in. As a result of this more hands-on approach, holiday lets generally do give you a better return. And there are also some quite nice tax advantages to having a holiday let, which we will be touching on in our next video.
So turning for a second to long-term lets in particular, there are some things that you may need to have in place. Firstly, if you are going to be letting your property to more than 2 tenants, you may need a house of multiple occupancy licence from the local authority. You will need to register as a landlord with the local authority. And also, if you're going to be taking a deposit from a long-term tenant, you will need to put that deposit in an approved tenancy deposit scheme. Otherwise, there could be criminal sanctions, which, again, I think we all want to avoid that. So put it in the deposit scheme, please.
Yeah, absolutely. So the council and the local authorities and the government do get quite involved in the letting process right from the off. And also, due to some recent changes in the legislation, tenants now maybe have a bit more rights as well.
Yes, so this is specifically with a business model where you want to do short-term lets during the summer and longer-term lets over the winter in mind. So Now, with a longer term let, it has to be in the style of a Scottish private residential tenancy. Now, those have been specifically designed to give tenants greater security of tenure. So you do have to bear that in mind when you're making the decision whether you want to let your property out longer term over the winter, because you may run into difficulty in trying to get a tenant out who doesn't want to go.
Yeah.
So
definitely. So quite a few things to consider already. In addition to those things, you will need to let HMRC know that you're going to be letting out a property. And at that time, depending if you're going to be letting out yourself as an individual, or if you're going to be letting it out in partnership perhaps with your spouse, or even an unrelated individual, or perhaps even through a company, you'll need to consider what type of agreement you have in place for the running of your letting business. At that stage, we'd really recommend that you get in touch with your solicitor and your accountant, and you can discuss the legal, tax and accounting issues that are relevant to your situation, and see how we can find the safest and the best value situation for you.
So, although Calvin and I have focused on the slightly more serious and cautionary aspects of becoming a landlord and going into a letting business, we would like to emphasise that it is potentially a very rewarding business venture and also can be very lucrative.
That's right, and if we didn't recommend that, we probably wouldn't be going on to video 2,
Yes.
which is coming up next time, in which we'll be considering some of the other issues that you need to bear in mind when you're actually up and running.
But if you can't wait for that, then please feel free to leave a comment below, and either Calvin or myself will get back to you, or our email addresses will be at the end of the video. Feel free to drop us a line, and we will respond to your queries.
Absolutely, right. We'll see you again soon. Cheers.